So, the sales department and dealer currency, how does it all come together? If you had the opportunity to watch the introductory video to the dealer currency program, you understand that the dealer currency philosophy revolves around transitioning the cash discounts that dealers are currently giving their customers into dealer currency instead. Now, the program does lend itself more so towards a dealership operation that has a back-end service department to support it, but it is not targeted to any one specific industry and really is open to any business that sells goods or services where at some point during the course of the buying process there is some form of negotiation before any final pricing terms are agreed upon. So let's go back to school for a minute and I'll show you a very basic example of what I'm talking about. In the retail world, the most common form of savings that we pass along to the consumer comes in the form of a cash discount or a percentage savings. Whatever the case may be, the discount offered certainly does not allow the dealer to generate the most favorable retail price. Let's look at an example. If we had a product that was selling for $15,000, maybe we end up giving the customer a $500 cash discount to close the deal transaction and make everyone happy. Obviously, any sales gross calculated from the deal would be based on the adjusted selling price of $14,500, since that's what the customer ended up paying for the merchandise. Now, before moving forward, it is important to clarify that the philosophy that we're conveying works exactly the same across all pricing structures. You could be selling a $2,500 product with a $200 cash discount, or a $50,000 product with $2,000 in savings, or a $200,000 piece of merchandise with a $10,000 cash discount to a customer. Regardless of the price variances, the dealer currency philosophy works consistently throughout all the differing price structures. Now let's go back to our original example. The objective of the dealer currency program is to transition the $500 cash discount that you had given to your customer and turn that cash discount into dealer currency instead. So, in this example, we would maintain the selling price at the original price of $15,000, but rather than discounting that selling price $500, we would include $500 of dealer currency in the deal instead, with the understanding that the currency is as good as cash to be used in your back-end service department or anywhere else you deem suitable in your operation. Pretty basic, right? I know you're looking for a catch, but as much as I hate to disappoint you, there really isn't one. So let's go back and finish off this example. So, instead of offering a cash discount of $500 and ending up with an adjusted selling price of $14,500, we maintain the selling price at the original $15,000, but we expense the $500 of dealer currency to the deal in order to account for the money in the future. Now, the actual gross on the deal will be the same in either case because the dealer currency has to be expensed to the deal. But what has changed is that as a business that is looking to retain your customers, you've now locked in $500 of guaranteed future sales to be used for future servicing or parts or any accessories that are associated with the product that you sell. And there you have it. You literally have turned air into sales, with the air, of course, being the words that are being exchanged between your salesperson and your customer. Instead of your salesperson taking the approach of, have I got a deal for you, Mr. Customer? I'm going to take this $15,000 selling price here, and I'm going to take $500 off it right now today. For today and today only, you're going to pay $14,500 for a unit that's valued at $15,000. What a deal. You're not going to find a better deal anywhere else. No, instead of taking an approach like that, you simply transition it to something more along the lines of, Mr. Customer, I understand that you want to maximize the value of your purchase with us here today, and I also appreciate the fact that you will be back here to do some servicing with us at some point in the future. So what we're going to do is with this $15,000 selling price, we're going to include $500 of dealer currency. Now, the dealer currency is as good as cash here and can be used towards any future servicing or parts or even any accessories you may want to buy at some point down the road. Whatever you want, it's your choice. The money's here waiting for you to be used at your convenience. Now, the customers will respond to this program for two reasons. They'll respond because they want anything that adds value and represents future convenience that is associated with the product that they're purchasing from your business. The reality is that by the time the customer is at your business and has made the final mental leap towards committing to their purchasing decision, they already know what price range they're going to be in regardless of any additional price savings that you pass along. I mean, if you look at our original example, the cash discount becomes almost irrelevant. Whether you're looking at a $15,000 selling price or a discounted selling price at $14,500, they're both the same financial ballpark. And when you consider the fact that the majority of customers tend to finance bigger ticket items over the longest terms possible, that cash discount becomes even more irrelevant in terms of impacting their monthly payment. And this is where the dealer currency fits perfectly. The dealer currency has a tangible value, and it also represents a future convenience for that customer at some point down the road. It gives them peace of mind knowing they won't have to pay for any servicing or parts in the foreseeable future. And if they want to buy some accessories, they have what they perceive to be as essentially being free money to use at their discretion at some point down the road. And it can't be overstated that, generally speaking, the majority of customers find any form of a negotiation process as being extremely unpleasant. The dealer currency program is a much more natural and comfortable means of interaction between the salesperson and customer that allows the customer to maximize the value with their purchase while enhancing the convenience of their future interaction with your business and avoiding any potential conflict during the course of the negotiation. And what does that mean for your business? Think about the financial empowerment that would come with transitioning the cash discounts that you're currently giving your customers today with the dealer currency that you could be giving them tomorrow. In fact, let's go back to class for a minute and take a look at what it could mean for you on the sales side of your operation. When it comes to the sales department in your dealership, you have three primary drivers in generating dealer currency. Number one, your new unit sales. Number two, your pre-owned unit sales. And number three, your finance and insurance office. So let's take a look and see exactly what kind of guaranteed future revenue can be derived from each one of these sources. If we were to take a dealership that sells 50 new units a month and 30 pre-owned, and on average discounts those sales $750 for their customers, the breakdown would look something like this. The dealership, on average, would give up $37,500 in new unit cash discounts and $22,500 in negotiations on pre-owned units. And then we have to look at the opportunities in the F&I office because business managers discount warranties and protection packages each and every day. For the sake of argument, let's say that the average discount in the F&I office is $150, which is a figure that is definitely on the conservative side. Now, if we take the 80 new and pre-owned F&I opportunities and multiply it by the $150 of cash savings being offered up, we'd have another $12,000 that is financially escaping from your dealership. In total, once we add it all up together, in 1 month alone, a dealership of this size is potentially allowing $72,000 of future sales to just disappear right out of their showroom. What if you could transition all of those cash discounts into dealer currency instead? What if you could turn air into sales? In a back-end service operation that is generating 70% gross profit as a percentage of sales, that $72,000 could represent over $50,000 in future gross profit for your business. Sure, nothing works 100% of the time, but what if it worked 75%? What if it worked 50% of the time? Could you live with $36,000 of guaranteed future sales sitting in your bank account? Regardless of what percentage of deals end up being attached to dealer currency, the fact is the math at any percentage is extremely favorable to your business. And so that's it. That's the general overview of how the dealer currency program can be integrated into your sales operation. For more details and specifics at how you can change your business forever, please contact us. I promise you, your business will never be the same. Thank you for your time.